Joining us now to make sense of what's been going on in the market, Scott Weiss. Weiss is a partner at one of Silicon Valley's hottest venture capital firms, Andreessen Horowitz. Full disclosure, Bloomberg LP, the parent of Bloomberg News, is an investor in Andreessen Horowitz. And not only does Scott know, by the way, about investing in tech companies, he knows how to run them. 4 years ago, he sold email security firm Ironport to Cisco for more than $800 million. Cory Johnson is here, too. Thanks for the time, Scott. And people are well aware of the market sell that we've been seeing recently. We don't want to ask you about the stock market, but you are speaking to technology companies all the time. What are the conversations like right now?
Well, they're ongoing. I mean, I think that the market for venture capital, anyway, is alive and well and healthy. You know, these are companies that we put, $5 or $10 million in that have a product that come out, 12 to 18 months later. So the market fluctuations really don't affect us there. But I think there's a major shift going on in enterprise software. I mean, for the longest time, it's been just a boring place. Microsoft launches version 12 of Exchange, or Oracle beats earnings by a penny. But I think there's a changing of the guard happening now that's really exciting in the investing community.
And when these companies talk to you, did they say, boy, it seemed like an IPO was something we could do a month ago. Now what do we have to do? Do we have to think about maybe somebody bigger that we're competing with that might want to buy us? I mean, how does that all play out?
Well, I think there's certainly technology companies or technology investors that invest in companies that are momentum investors, that are waiting for the IPO, and if that IPO window slams shut, they're left having to continue to help that company. We only invest in #1 franchise companies, and so those companies typically can raise money at any time, and are actually, if there was a downturn, actually can pick up share in a downturn, and so they're largely immune from the market fluctuations.
So you talk about the startups you invest in $5 million here and there.
Yeah.
But you guys have also gone in somewhat later stage into Facebook, Twitter, Groupon.
Yes.
And Groupon, a particular company that is trying to file to go public.
Yeah.
And wants the markets to be there to support them, perhaps even needs the market to support them.
Yeah, no question. Like I said, if you look at all those companies, #1 in their space by a wide margin. Can't speak to the ones that are in registration, obviously, but the companies like Skype or Airbnb, late stage investments that we've made. Again, these guys are #1 by a clear margin. True new franchises in their space, and so if there is a downturn, that they can certainly go out and raise money at any time.
One of the interesting things about the way you guys have invested at your firm is at different stages.
Yes.
And I've asked Mark and I've asked Ben, your partners there, but I don't exactly get it. Why are you getting into some of these companies so much later?
Well, it's funny. When you think about in venture capital, every year there's 90% of the returns in venture capital are made from 10 companies. And sometimes we don't catch them at the right time, but we want to be in every single one of those 10 companies. And if we can find them at the early stage, mid stage, or even in the late stage, if they emerge as a franchise player, someone that is going to be dominant in their particular space, we want to get in them in any place we can.
Now, you've been there running a company, of course, selling it to Cisco for more than $800 million. What kind of advice are you giving to some of the younger leaders, let's say right now, over the last couple of months?
Well, I think that when you see a downturn like this, you want to make sure that you have enough cash on the balance sheet. So that's an easy one. Also, if you have a burn rate, it's always good to know. I don't think it's only been a couple of weeks now. I don't think now's the time to really kind of turn your plans upside down. But it's good to know how to cut your burn if you need to going forward.
And speaking of cash, is there still a lot of cash available from venture capital firms for these companies?
As it turns out, the private markets lag the public markets in terms of liquidity, and right now I am seeing there's still a lot of late-stage deals getting done, and there's certainly, like I said before, the venture capital business right now, the early-stage deals is bursting right now.
Have you guys had to make any calls to invest? Typically the way it works is there's commitment of capital,
yes.
But then when you ring them up on the phone and say, hey, we need that couple $1 million you promised us. Have you had to do that in the last month or so at your firm, and have there been any results that might have surprised you?
So, all of the companies, like I said, are, at least in our our firm, the companies being franchise players, like I'll say a company like Box.net is one of our companies, it's a late-stage company.
We've had them on our show.
Absolutely blowing out all their numbers. And they're not seeing any data in their customer uptake that would suggest pulling back on their marketing or their sales efforts. So, you know, we're monitoring the market, we're monitoring the customer base, and, you know, obviously these guys will have plans to pull things back if they see any indications that things are going south.
You know, when a big public company like HP is dealing with what it's dealing with right now, and there's one of these smaller software companies that is growing, does that create an additional opportunity for them?
Well, I think it's going to be harder for the large established companies. There is a tectonic shift that's going on in enterprise software right now that is not playing out well for Microsoft and Oracle. There's SaaS-based companies that are coming in and just by application kind of ripping out the Siebels, the PeopleSofts, the Oracles. And the same thing's happening to Microsoft on the desktop. You know, the tablet and Android coming into the corporation is completely ripping up this 90% market share Windows monopoly that has just been, you know, persisting for 20 years. So there's a lot of change in the core infrastructure that is really like letting these smaller companies jump in.
I imagine when you're talking to some of the businesses that you're investing in, they say, what happens if we sell to one of those bigger companies? Are we going to get lost in the mix, the chaos? I mean, how do you answer a question like that?
Well, I mean, I think that there are some companies that are better than others at integrating smaller companies. And my sense of it is a small company has to plug into something that already exists at a Cisco or an HP in order for those salespeople to sell it. Or it has to be big enough to be a thing in and of itself. If it's somewhere in the middle, if it's kind of a middling, small-sized company, it gets lost and tossed, really.
I want to ask you about how that works at Cisco. Cisco is famous for integrating companies well. At least that's the rep. What was your experience there when you sold a business to Cisco? Was there an integration that seemed to be a structure of integration that seemed to be very planned and worked?
Oh, absolutely. There's like a playbook that they have that has stood the test of time. And they do a really good job of it. They think about every aspect from finance to human resources, how the sales structure fits in. You know, I would say that they do a great job as far as large companies go.
You're focusing so much on software right now, and you were just telling us in the break that there's, what, a couple new possible investment ideas that are popping onto your desk every day?
Yeah, it's, you know, I think that the cloud as a delivery mechanism for all enterprise applications is just sweeping through the industry. And I think, you know, like Oracle is starting to look a lot like Blockbuster Video to me. You know, like you can almost see that the end is near. It's probably why Larry decided to invest in NetSuite as a hedge. But we're seeing these companies like Salesforce and Workday and Box.net come in and just take share from each one of these companies. I think Salesforce came out yesterday and, you know, raised their outlook, beat earnings, and so I think that not only is it the applications companies, but we've recently invested in a couple of cloud infrastructure companies.
Well, yeah, I mean, you know, whether it's Blockbuster, whether it's Computer Associates, you know, Oracle has become a very big software company. If you look at what SAP has become in the last 10 years versus Oracle, it's a lot bigger business. You really think Oracle dies here?
You know, if you look at what's going on, we have 60 portfolio companies at Andreessen Horowitz, and not a single one of them uses an iota of Oracle software.
Why?
The reason is that have you ever used like a Siebel or an Oracle piece of software? I mean, it's one of these things that it takes a month to learn. It takes
after a 2-month installation.
After, you know, EDS has spent, you know, like a half a year integrating it, and what it's being replaced with, like a NetSuite or a Salesforce. I mean, these have interfaces like Expedia. You know, like you and I could use it. We know how to use the buttons, and it's intuitive. You don't need a month-long training class. And the other thing is, since you don't have to pay $5 million to get it installed. You can install it for $50 a head. You can try it out in one group, and then it starts to migrate to other groups. That's exactly how Box.net is growing. They come in, people start, you know, they get around the Microsoft SharePoint because it doesn't work, and they just start using it, and then before you know it, half the company's on it.
Do you get some companies that you're talking to who are fearful of all this bubble talk out in this part of the country?
So I think that I don't believe there's a bubble going on. I think there's an actual boom. When I was talking about what's going on with Microsoft and with Oracle, enterprise software has been boring. I mean, really boring. And now that's just, I think there's going to be some real new franchises that are going to emerge out of this upheaval that's happening on the desktop and in enterprise software.
So are we going to have to see companies like Microsoft making the kinds of dramatic announcements that HP just made?
I think it's absolutely on the docket for all of them. I mean, just think about what's happening. The CEO that this is the CEO that still replies to his email with a pen and hands it to his secretary is now bringing their iPad in and saying, hey, hey Bill, I want to see all this stuff on this iPad. And so like IT is moving and it's changing at a really fast pace.
And that's that dramatic change too. If CEOs bringing Box.net and CEOs bringing iPads, and that's a tectonic change as well, it seems.
It's amazing.
Scott, great to get your perspective. We look forward to seeing you back here on Bloomberg West soon.
Great. Thanks
Scott
so
Weiss
much.
of Andreessen Horowitz.